On the show, we've got lots, so let's first up connect with the management of Muthoot Capital Services. Madhu is with us on the show, and thank you for joining in. Let's discuss your numbers in greater detail. It's been a very strong Q4. Tell us, what were the key drivers for, because the profit growth has been encouraging, as is the NII.
I think our strategy in terms of expanding beyond South has paid us well. We have now very well entrenched into the western and northern markets. Besides, Q4 is generally a very good quarter for auto industry, and post demonetization, I think we were able to really bounce back in terms of reaching out to our dealers and the branch network that we have got. We were able to really revive back. So Q4 was fantastic. Even compared to last Q4, we were up by 110 crores approximately disbursement. So I think we bounced back very well after Q3.
Oh yes, indeed, and that's definitely been reflected. So, the AUM growth has been healthy at over 38%. What kind of a growth trajectory do you see for FY18, and tell us what exactly the portfolio mix could look like?
See, we are very bullish about at least next couple of years as far as two-wheeler industry is concerned. We see that the industry is expected to grow by another 7 million units, which is approximately 1.86 crores is the sales that is happening for the current year. It would go up to about 2.5 crore in next couple of years. So we see that there's a huge headroom there in terms of growth that can happen. Besides, we expanded since last 1 year outside South, and teams are in place. So we are expecting that across the country the numbers would grow. So we are looking at least 40% growth in terms of our disbursement, in terms of book, and predominantly our book is going to be two-wheelers only. At least 90 to 94% of our book is going to be two-wheelers. That is what we plan as of now.
Okay. Now, you had plans to grow your loan book to about 2,500 crores. When do you expect to achieve this AUM level, and what is the strategy?
As I said, that we are bullish about two-wheeler business. Around 2020, we are looking at doubling our books. So 2,500 crore is something which we are looking forward maybe next 1.5 years itself. And the objective is to double the book. So 2020 you will see us 4,000 plus. That's what I can say right now.
For margins going forward and the cost of funds?
I think cost of funds is something which we feel there's a huge scope, and this year that is one of our levers that we'll use very effectively. We are looking at a NIM of around 14 to 15, around 14%. ROA of approximately around 3% is what we are projecting. ROE this year we were around 18.5%, which we feel that we'll better it in coming 2 years. So all around we are seeing that from the current levels of margins, we are looking ahead in growing that actually with expansion.
All right, and is there scope for improvement when it comes to the asset quality going forward?
That is one of our key strategy, and one of the reasons why we were able to bounce back compared to Q3. The focus on asset quality was immense. We were able to bring down our NPA levels also by about 5 to 6 crores. Asset quality is something which we feel going forward in two-wheeler industry, it is going to be the critical lever to achieve the necessary profitability, to achieve the necessary return on equity, and we are looking forward to bringing down our NCLs, which is currently around 2.2% to sub 2% is what we are looking forward to. It should be around 1.75. That is what is the ideal NCL that we are, net credit losses that we are looking forward to.
Okay, let you go on that note. Thanks very much, Madhu, for sharing with us the highlights of the quarter gone by, and huge levers being seen from cost of funds going forward. And of course, the big headline is that they're looking to maintain or rather improve their asset quality going forward. The stock at 388.9, down about 2% in trade. Meantime,